This episode is sponsored by Kickcaster.com.
Rack all this dinosaur blood and oil. Like, why can't we get down there and just put a rod, into the lava and put some steam out there, and then boom, there you go, solve the problem. Iceland is 100% that.
Yeah, they are. And I actually thought that was actually pretty cool that they have that. And I'm surprised nobody else had decided to think like, oh yeah, they're doing something great. Let's copy that.
Yes.
Welcome everybody back to another exciting show, the About That Water podcast, where we help the sandwich generation build strong financial habits so that they can spend money, talk about money, and even enjoy their money with confidence. Today I have somebody who is heavily invested in the AI spectrum, but remember, AI is just an umbrella. This is actually helping you to do better with your investments. And thank you so much for coming on today. How you doing today, Andrew?
I'm great. Thanks for having me on. Appreciate it.
No problem. So I'm tired of hearing AI. AI this, AI that. But we all, it's our life right now, and we still trying to get better with it. And that's the reason one of the reasons why I'm really glad that you decided to come on this show to kind of help us get better with our finances utilizing AI. So first off, what is a good AI trade right now that you're looking into?
Oh, we were doing one actually today for our members, Big Bear AI, which is an AI company itself. It's also a stock, BBAI. It's in the middle of a small short squeeze. So they had a number of government contracts that they secured, which was a bit surprising because I thought the government was closed for a little while. With all the cuts they're making, but seems like they're still issuing new contracts, and they got a couple big ones. And so those who are betting against the share price are getting squeezed. So it started out about $3.80. Last time I looked at it, it was at $9.40 and climbing. So we sent a notice to our members when we did the math. We're like, there's like 2.4 million options contracts that have been sold that expire in a week at $8. Like these people are going to have to get out of this position, and the only way to do that is to buy the stock, which forces it up. So within like 3 hours, our members made 50% today. I did too, so that was fun.
Nice.
And those are always good. So it's an interesting AI company that they really track foreign news. That's their specialty. Track and analyze news from foreign companies and kind of give a summary to the State Department, CIA agents, and Defense Department about all the bad stuff that's being said about America globally and kind of rising trends. So as you can imagine, given some of the recent moves with this new administration, there's some concerns about market reactions globally, to say the least.
Right.
So they might be in the right place at the right time. Chaos is good for business. And I think the last contract I got was like, I want to say it's 185 million, but I could be remembering. It might be more than that.
Jeez. I mean, that's good for them. Yeah. Good for business.
Yeah, it's very good for business. I wish them luck. I haven't had a chance to really go deep into their technology. But I did notice that, the stock for a while kind of traded like a meme stock, for like the last 6 months. It just traded with a bundle of other ones that were like highly volatile, like the quantum stocks and stocks like Upstarts. It was clearly algorithmic movements. But now it's like completely broken out from that. It's on its own, and it's starting to get attention on the Reddit forums. And, you got all the moon and rocket icons coming out.
Yeah, look, I love those. To the moon. All the time.
Diamond hands and all that kind of stuff. Although, I was reading reports and the diamond market is like dying because now they can make them in labs. So some of the companies like De Beers and Signet, they're like hoarding diamonds just to keep demand up.
Right. But if you think about it, because I think somebody was looking into the Rolex, for instance. The plain Jane Rolex is more expensive and more of a timeless piece. But as soon as you start adding those diamonds into there, you're chipping away the gold. and to add in a diamond, but the gold is more of a commodity, so it's constantly fluctuating day to day. Like midday, I believe it changes. What is changed twice a day, right? If I'm not mistaken.
It's
And
yeah, I mean the price is moving, at least on my monitor, all the time.
oh, sorry.
The bid and ask. So
Yeah.
it's highly aligned with the treasury yields right now. So if you watch the 10-year treasury yield, and every time it starts to go up.
So you started. So you started this company called like LevelField's AI. Like,
Mhm.
what problems does this company actually starts to solve?
So the main challenge is trying to keep up with information flow.
Mm.
So if you are a Goldman Sachs size organization, well, you're going to assign one person to cover 10 stocks and then, you have 2,000 people to cover the whole market and international markets. Good for them. But if you're a independent investor and you're trying to monitor 6,000 stocks just on the US exchanges, all their announcements, the 4 earnings releases per year, the product launches, the CEO changes, what's going on in the macro environment, what's coming out of the White House, which is just a job in of itself to follow the executive orders daily. You're drowning in information. You can't keep up with it. So what normally happens is people just kind of grab 10 stocks that they know and that are talked about the most by the media, Mag 7, the Teslas and the Googles and the Microsofts and the Nvidias, and everybody crowds the same trades and the media keeps talking about the same companies, but there's like thousands of other really great companies out there that you're missing out on while everyone's pouring into the same trades. So the idea was, can we kind of level the playing field and give superpowers to an average investor by having AI search agents monitor for not just news, but news that actually matters, right?
Mm.
Company announcements that we have already correlated to share price moves. So by the time you hear about it from our system, like this is an event that's going to change the share price. What you do with that is up to you. Some people trade on it. Some people are just using it to monitor, their existing holdings. Some people are just looking for companies they never heard of. And what starts to happen is you find these like really interesting gems out there, companies that they'll announce they're doing a special dividend of like 8%. And all you have to do is buy the stock and hold it for 2 days and you're eligible for an 8% dividend.
Nice.
You can look at that and say, well, why are they doing it? That's the next question. And you might find some strange correlation that's there, right? Like a coal company starts to do it all of a sudden. You might ask what's going on with coal. And then you look and you see coal prices have like tripled because a war started in Ukraine by Russia, and Russia cuts off the gas to Europe, and the Europeans start switching to coal away from gas, right? So those things have this like butterfly effect that the system's able to identify for you, so you don't have to think about it.
That is great. Because we were just talking about it, like in the green room, I guess you'd say, is like how the president is saying certain things, and next thing you know, we don't know what's going to happen next.
Yeah.
Like,
Yeah, exactly. And you start to see some of the reactions, right? So like oil companies, for example, they know, right, deregulation is coming. They don't know exactly what that looks like. Well, maybe they do. I don't know. They could have had the conversations behind the scenes with Trump. Who knows? But they start to take a little bit of a more relaxed approach with their cash. So they're sitting on cash just in case. And then all of a sudden they realize, ooh, in the next 4 years, we're going to get rid of all these regulations and fines. We can actually take our cash and buy back our stock. Fewer shares means more value per share, drives the share price up. And so you start to see this reaction on a daily basis to like these executive orders that are coming out seemingly every few hours, and it's changing the market every time it drops. I mean, it's like one day it was like, oh, slap tariffs on Canada and Mexico. So you see all the car companies just crater. And then it was like 2 hours later, Mexico's like, we made a deal.
Yeah, I heard about that. Yeah. I was like, what?
And all the auto stocks popped. And, we're like, all right, buy GM, make their stuff in Mexico.
Yeah.
Um,
Can you explain a little bit like how like level fields actually look at the approach of event driven investing?
yeah, so we're effectively doing what large hedge funds do to make themselves so successful.
Mm,
The difference is we're democratizing access to it. So if you're a Bill Ackman running Pershing Square, and he's responsible for what's commonly referred to in the industry as the greatest trade of all time, which I don't know if it was the greatest, but it was certainly one of the biggest. And he was basically shorting COVID time, shorting the market during COVID, made $2.5 billion
nice.
inside of a month off a $20 million or so investment. So they do this stuff all the time, right? They're betting on the events, and then there's a reason for it. About 15% of all their trades are based on events, like purely events, and other repositioning is often driven by events. But you need a lot of people to monitor the market to figure out what to do and how to act and how to react to these events. And you need that like 20-year knowledge on Wall Street to know how to do this. So we've taken all of that knowledge and all of that capability, and we have put it in the system. So you don't need to have been an expert, for 20 years on Wall Street. The system just figures that out for you. We've already done the correlation analysis. When the event comes out, it's proven to move share prices. It matters. You could ignore a lot of the noise, all these opinions out there about what's going to be the next NVIDIA. That is just a joke.
Right.
And we just take a very sensible point of view. This is our philosophy is you cannot predict the future beyond a couple of years. Right. So we can kind of see like the effect of some policies, maybe a year out, 2 years out. After that, you don't really know because there's other factors that happen. You've got wars, pandemics, weather events, policy shifts, shifts in the general population competition that comes in. So we kind of take this mindset of like, why bother trying to go long term and figure out all these long term winners when there's a million short term opportunities that you can make money off of and then put the money back into a safe place so that some politician or leader somewhere doesn't just decide that they want to invade the rest of Europe and the market crashes. There's always some potential black swan event that can wipe everything out.
Yeah.
And so we look at that and say, if you have a series of different types of events, they are predictive of the next 3 months, maybe 6 months, maybe 12. After that, we don't know. But if you can make 50% in 12 months, why would you bother holding something, for years during the period of time when it's already overvalued? And you see that again and again. Like, think of a stock like Zoom,
Yeah.
which was like the biggest stock of the pandemic, right?
Definitely. Yeah.
And it's just been sitting around, I think low 30s forever.
Hmm.
So if you bought and held, you would have wasted 400% gain and be right back to where you entered over a 5-year period. Like, that's not fun.
So how did?
Well,
Because I was thinking about that. A lot of people keep saying as well. You can do dollar cost averaging. For those of you who are not new to this, it's just pretty much you just take that flat fee. You're just gonna buy whatever the stock is at, either on a monthly, yearly, weekly basis, whatever you decide to do. And they're just like, all right, well, I'm gonna just sit on it. But also from a financial perspective, a lot of the times, most of us in this community talk about ETFs and just kind of like, hey, just keep it a low cost ETF. What is the benefit of utilizing, like, is there a fee to use this annually, or is it based on how much money you put in there? How do the finances work for utilizing such an AI platform like LevelField's?
sure. So our starting price is $300 a year to get in, use the platform. If you want like the premier version with all the bells and whistles and unlimited everything and some analyst assisted trades like the one I was mentioning that we sent out, that's $167 a month, or it's 20% discounted if you do annual. So if you look at it, like the market rate, I think just sitting in cash right now is somewhere between 4 and 4.25% for a year. A really good dividend stock would probably give, 3.5, 4.5% yield per year. We're doing those events and that happened in like an hour. So you can kind
Nice.
of do repeated events. Let's say you did one a week and you made 3% a week conservatively, we have a lot of events. Well, that's 12% a month times 12 months, and you're up 144%. Now, that's obviously if everything goes to plan, but even if you create some losses along the way, that's still going to be 10 times what you can get just sticking your money in the S&P and leaving it long term. I mean, the index investing is good. It's safe. It's easy to do if you're dollar cost averaging and you're doing the indexes, but there are big drawdowns, right? COVID was a 30% drawdown. 2022, we had a 25% drawdown. We go back in end of 2018, there was a 20% drawdown. When you look at the financial crisis, that was a 50% drawdown in 2008. And then in 2000, there was a 60% drawdown for, the NASDAQ and the S&P. And then from 2000 to about 2013, there were zero returns for the S&P 500. Zero. Wow. So you would not be making anything unless you did the dollar cost averaging and were buying the dips along the way. But if you just bought and held, there's no returns. So there's a lot of volatility there, and not everybody has that kind of time frame.
Yes.
Where you can just wait forever until things come back, right? Because some of us are old and we don't have that much time. Some of us actually need our money and want to use it, not just kind of watch it come and go like you're looking at the ocean.
You got that right. Because I'm thinking of, for some of us who are, like the person that's listening right now is more than likely they have, because I focus on the sandwich generation, which means they have a parent or a child at the same time. Mm-hmm. And they looking at their finances look, I don't have that much to deal with it, but I really need to do something with my money. Or my parent is actually getting older and I'm about to put them in a retirement home because I'm tired of them living with me. Mm-hmm. But they want to at least do something with their finances to make this happen. And it seems like the AI tool will also sell and buy for you at the same time.
So we don't do the trading. Okay. That's a whole different level of regulation that we just don't want to access, don't want to deal with the SEC. So think about it it's an AI search agent with analytics. So if we take a Google News with a lot more features, more power, more accuracy, no false positives, and with numbers, you can set up an alert. And we have preset alerts. You can say, I want to know when, the CEO of a poor performing company leaves. Mm-hmm. I'm going to set the financials because if you look at that scenario, the market rewards the share price of finally we got rid of this guy. Now we've got hope that there's someone else that can come in and turn it around, like we saw with the Starbucks situation. Mm-hmm. Right? So they grabbed the CEO from Chipotle recently. Starbucks stocks up 25% just on hope. Wow. Don't know if it's going to make us get coffee faster yet, but it did wonders for the share price. So you could look for those events, and they happen again and again and again. And that's kind of the interesting part is you don't need to be an expert in fundamental analysis like Warren Buffett. You just need to know, hey, every time this event happens, this is how the market reacts. And there might be a CEO departure of a poor performing company 100 times a year. Mm. So you look at 100 events and you can average 5% per event. That's 500% gain. There's a lot of that you can build in where you can say, most of my money I want to do, this is what our users often do. They'll say, I've got 80% of my money long-term, not going to touch it, whether it's in a 529 or 401k, mm-hmm. right, in the indexes. But I would like to get some higher returns and have some kind of walking around extra money. So they take 10%, 20%, and they devote it to event-driven investing. And they look for higher returns. And, sometimes it's just steady 3%, 4%, 5% moves. But in there's always, at least once a month, several events that are 50%, 100%. There was one that was 600% in a day.
Jeez. Nice.
And, you capture one of those, you've just done your return for 5 years, 6 years, and you could do it in a 24-hour period. So we're not saying that that's every event. There's definitely a distribution curve but it makes it a lot easier, and you can not necessarily be an expert at the market and do this and be like, oh, I get it. Like Jeff Bezos leaves Amazon. Amazon stock's not going to go up.
Yeah, that's true. Because
It's going to go
everybody's
down.
invested. Yeah.
So
You know.
like if you care about it and can move on it, like, and then our analytics will show it doesn't only go down.
Hmm.
It goes down for about a month, and then it starts to turn around after 10% dip. So what do? You could short the stock, or you could just wait for the dip, buy the dip, and it comes up 10%, and then you still own Amazon, but you bought it at a cheaper price. So those are simple kind of strategies that people play off. If you're into stock options, you can pretty much multiply the numbers I said by 10,
Hmm.
because they have greater gains. But we try to make it really easy. And even someone who just wants to do like basic research on a stock, we cut down a lot of the time, right? So you go in and you're looking at maybe your Apple stock, and you're like, why the hell is it down?
Right. That's one of the things I was going to ask next. Yeah.
Yeah.
It's like, is it more like a research tool to kind of help out with the current portfolio that you have right now? So you're like, hey, I'm looking at this long term or even short term, like say like next week. Will this go down? Is it a good time to buy or a good time to sell?
Yeah. And you can, the way it will work is you subscribe. You can either track a stock, you can track a watch list, or you can just track an event type.
Mm.
So you can say, every time this event happens, just let me know. I don't care what the stock is. Or you could also set it to say, you know what, anytime that, large cap tech stock is doing this type of thing, a product launch, let me know. And then we have kind of a analytics that will show like the win rate, the average price move over a day, 10 days, a month. And so it's like a weather report. Right, you're looking at, you're like, oh, there's an 80% chance of rain. It's supposed to rain for 5 hours. I get it. I need an umbrella, a pair of boots, and whatever, hats for the kids. You can kind of do the same thing with the stock market. You're like,
I like that the way how almost like you said, a weather ticker, and that would be good to have like on the display and running almost like 24 hours. Almost instead of watching the Bloomberg and all of them showing their little ticker, you can look at your own and curate your own list.
yeah, exactly. And then if you only want to get alerted at a certain time of day, you can do that. I mean, like, don't bother me the rest of the day. I just send it to me at 9 a.m. There's a lot of flexibility. So we're trying to cut down the time and the hassle and allow people access to more of the market, because we feel that there's a huge media bias towards the big companies, because it creates interest, it creates clicks. The clicks drive advertising revenue. That's what the publishers actually care about.
Mm-hmm.
So that's why Elon Musk is in the news every day. It drives clicks and eyeballs. Even if it's a private company like Twitter, they keep talking about it.
And people buy into it.
Yeah, people buy into it, but you miss out on all the other stuff until,
Yeah.
and this is important too, like until you see a stock that's up, 300%, and then it makes the news finally, and you're like, how is this helpful? It's already up. Like, I'm going to buy it here up 300%. Like, tell me when it's starting to make that move. And that's where the other aspect of LevelField's is really focused on, well, what are the events that cause those big moves over time? Like, what's that catalyst that starts that process? Like, how we find those like breadcrumb trails that are left by the leadership to then figure out, okay, I see what's going on here. Like, they're actually swimming in cash, which is why they're giving away all their money. And if I get them at that point and I hang on for, a year ride, and then you can ride out that longer share price increase and make a lot more money. So yeah, it's taking out risk, it's taking out time, it's sort of maximizing returns.
And it's also, it sounds like it's easing up the thought process and getting out of your feelings in this process.
That's right. We don't want feelings. We want data. We got enough feelings in this world on politics. We'll keep the feelings aside, make data-driven decisions, and then, and everyone's been there, right? Like, you're sitting there and you're reading a headline, you're like, oh crap, I got to get rid of this thing. Is this going to be bad? This sounds bad,
Yeah.
There was an interesting research report that came out that said news outlets that have more negative coverage perform better financially than news outlets that have more positive coverage.
That's crazy.
And it was like an analysis of why, right? Because human nature is we're inclined to focus on things that could harm us as animals roaming around the planet, once. And now we're all driving our cars and then the cars are driving us. We're kind of eliminating that need to be worried about a lion jumping out and eating us. But that part of our brain is still very much there to focus on the negative information and then kind of hyper react to it.
That makes sense.
We try to take that away by saying, hey, don't worry, there's a mean reversion, there's a correction normally 30 days away. So it might be bad today, but if you look at the numbers, sun's coming out.
Yeah. We gotta make it happen. So I'm gonna take a quick pause here. Is it okay we continue on, or you got a cutoff?
Okay, yeah, I blocked it until 3.
Okay, perfect. I'm gonna try to wrap it up in 15. Is that okay?
Yeah, that's fine.
Cool. All right. So we wanted to know, because now that you have this tool out here for a while, why did you even create this tool in the first place? Was it something that like a passion project? Did you do it with a team? Did your mom tell you like, hey, I need to get better with my finances?
It's kind of all the above, actually. So start with the fact that like, as an entrepreneur, I am pathologically optimistic that we can build stuff to help other people. So, we could build stuff to help big companies get bigger, but that doesn't really get me out of bed in the morning. So we wanted to solve a problem that we knew was in the market that was going to help people and have a mission-driven organization. The backstory, there's like a long and a short version. I give the short version, which was we had a company prior to this for 10 years. And it did a lot of like online data mining and analysis, also around events. It was sort of reputational damage assessments for publicly traded companies, where something would happen and then our system would identify what that something was. Like for instance, we had a rail company as a client, and they were not always 20 or 30 times a year, the train would derail, crash. Sometimes it was okay. Sometimes it was horrible chemical spills or oil spills. But the company was so large that they usually wouldn't even know about it until like the CEO would turn on CNN and they would see the train like burning. So usually before that, there was somebody in their backyard taking a picture and putting it on Twitter. We would be able to grip that picture, flag it, send it over. And so we were always doing like real time kind of event analysis. But we started to see all these patterns, right? So company would have an event, move the share price positively or negatively. We ended up selling that company in 2019. Nice. And the tech group and we kind of core product team like regrouped and thought about, what was difficult about that business, right? What went right? What went wrong? What could we have done better? And we decided we were going to build AI to kind of auto-populate a lot of the data sets that the traditional Boolean search just couldn't do because it was all the false positives, as you see. We weren't really sure what the target market was going to be, but we always kind of had this idea of like, maybe we're on the wrong side of this because, these companies that we were helping, and we felt good because they had employees and employees were people and they get to keep their jobs. But I was like, well, the company just saved $1 billion. We got our annual contract. Maybe we should be, on the investing side of this. And then as we're trying to figure out like what problem specifically we were going to solve, COVID happened, which was a huge event.
Yeah.
And it changed the market, and started getting phone calls from parents and cousins and brothers who were concerned that this was the start of a global depression. They wouldn't have money for their kids' college savings. They wouldn't have money for retirement. This was going to wipe everybody out. And I have an unusual background of sort of starting my career as an epidemiologist, working in public health, consulting for the CDC, and then moving into event-driven data analysis with a lot of like market insight. I had just sold my company, so I also didn't have a day job, so I could spend 80 hours researching like every pandemic in the history of America how did it impact stocks and what sectors were most affected and what was the government response. And I made this massive analysis and figured out the market's going to be right back to where it was before. In 6 months, we're going to have a vaccine out in 12. Told people that. They thought it was nuts. But ultimately, that's what happened. And it was just not me being that particularly bright about it. I was just looking back at what had happened in the past and saying, no, like they're going to roll out the vaccine. They're going to use some version of one that they had. And they're going to close down the schools just like they did during Zika in Miami. And the cruise ships are going to get killed. The airlines are going to get killed. The hotels are going to get killed. Tech's going to do well. And all started to sink in that like, hey, what just really happened was there was an event that came. No one knew how to react to it.
Yep.
And yet there's this treasure trove of historical information that we could have accessed had there been a solution to access that, which didn't exist. So that was the okay, it's events, it's past movements and how they could be used to predict future movements of prices. And it's to protect an individual who doesn't have the expertise to go do that kind of research or simply just doesn't have the time and would normally be forced to wait 2 weeks until Goldman Sachs has bought all their positions and then release their, what stocks to buy for COVID lists so that you can bump up the share price of everything they already bought. Just a theory. I don't know if that actually happened. Just a theory. Just to clear the air. But yeah, I mean, that's kind of a typical play, right? Would be a smart move. Yeah. So we wanted that to solve the problem. But then we realized the black swan events are good, but like what really happens on a daily basis are these corporate announcements. That's where the steady flow of news is. Those are like, death by 1,000 paper cuts instead of just the big event that happens every 4 years. So we wanted to make that, and we did. It was hard. There was a lot of problems to solve. And we had to deal with real-time data from the markets. We had to deal with the financial statements and balance sheets and crunching the right numbers and metrics. We had to map that to all the tickers. We had to eliminate weird false positives like bluebirds that fly in the sky versus bluebird bio, or acronyms that are used, and short names, Astra versus AstraZeneca versus Astra, the rocket company. So, there was that. There was the price correlation. It was a ton of work. We got it done by kind of launched like a minimum viable product. It was the end of 2022 and then ran a beta test for a year. So by the end of 2023, we had a lot of feedback from people saying, this is really cool. I love the alerts. I don't like being on platforms all day. I just kind of want to click a few buttons and then sit back. And then I, trade off of that. And so we saw at that point, there was a really big opportunity and there was a lot of demand. And this was coming in the wake of 2022, which I think took a lot of new traders that came on during COVID by surprise. Mm-hmm. And people had just signed up for a Robinhood account for the first time and thought that the market only went up. And they were making so much money as the government's poured $4 trillion of liquidity out there. It's pumping up the stock market, and everybody was a stock genius in 2021. And then it starts to sell off in 2022, and people start looking for strategies in 2023 that like, hey, maybe I can't just buy the index if the index is down 25%. And so that got us a lot of, I think, interest in alternative ways to think about investing. We're not the only type, but right. There's fundamental, like if you want to be in a stock forever and you want to analyze their balance sheet and their, debt to equity ratios and what they're paying for interest rates and go look at all that stuff. Great. If you can do that, most people can't or don't have the time or don't have the expertise. So they've often moved to technical analysis, which, is sometimes useful, sometimes more like just staring at the sky and making shapes with the clouds up there. You can look at a chart and say, oh, I can see a teacup form here.
Buy it now. Right.
So we wanted to create a third way to do this, which is event-driven investing and to make it accessible. And I think we've done it. Obviously there's always more to do. We want to keep improving. We hope people sign up and kind of contribute that way, because as they sign up, or even, let your friends know about LevelField's, like that allows us to pursue this mission, which, admittedly, there's not a lot of institutions who are in kind of the investment world that necessarily want to see democratized access to all stocks.
Yeah.
It eliminates the edge.
So I'm thinking of because I had a couple people that come on the show before that talk about ESG investing. For those, as a reminder, it's environmental, social, and governance. Does it actually track that type of investing? So somebody that really want to be more environmentally in their stocks, or just it doesn't matter, just like, hey, we only going to do with this particular ones that you put in.
We haven't added ESG events, not necessarily because we don't want to. It's just because we haven't seen the correlations there.
Got you.
So, if Amazon comes out and they say we're going to get rid of all cardboard in the next 10 years, it doesn't actually move the share price.
Interesting.
So while it's great, it's not really the thesis of the application. So if at some point, if there is a renewable technology company that comes out and says, here's a new product, and that product is exciting because the unit economics are cheaper than oil, that makes the platform.
That makes sense.
An array solar that comes out with a really cool way to do solar, where it doesn't just sit in a field, but it actually tracks the sun throughout the day, as the earth is rotating, so that it's always facing the sun instead of only facing the sun sometimes. As is the case, the people that show up to your house trying to sell you residential solar,
right?
They're going to nail it to your roof, right? And like, you have to be facing south. Like my neighbors across the street who face north, like they're SOL. Right? They can't get solar because they face the wrong direction. But they're like, oh, you face south, so we can get some solar on your house. So this, cool technologies like that there's a wave company that I saw recently come through, just got a government contract. They have, and that makes the platform, they have a technology of like floating buoys. And as the buoy is rocking, somehow it makes energy.
Okay.
So they put it in like a rough ocean, where nobody's going to be, and it generates power, and then they transfer that power somewhere.
Yeah, I've seen various ones, because there's another one that sets one up along the coastline, and along the coastline. So as the water hits up against it, it generates power that way, instead of putting those big boulders that they have just to kind of the wall that they put up.
Yep.
I was like, oh, that sounds interesting, but does it scale? Like how and how long does the technology last?
Right. And those things generally on their own, they're not going to do very well. So it requires the government to say, yeah, we don't do anything with the water over there because it's too rough for seas. So let's see if we can make some money off of this. They have a lease agreement. The company makes a little money selling power. But yeah, it's not something that you're going to see, I think, scale tremendously. Geothermal, we see stocks that are doing geothermal, which that is where I think the best source is, because we're all just sitting on a ball of lava wondering how can we get warmer.
Yes.
We're looking to the sun like millions of miles away while sitting on a fireball.
Pretty much.
So
that's one way of looking at it.
Like rack all this dinosaur blood and oil. Like, why can't we get down there and just put a rod, into the lava and put some steam out there, and then boom, there you go, solve the problem. Iceland is 100% that.
Yeah, they are. And I actually thought that was actually pretty cool that they have that. And I'm surprised nobody else had decided to think like, oh yeah, they're doing something great, let's copy that.
It's it's being done. They're trying to do it like around Yellowstone. I guess we haven't quite figured out the drilling technology yet, which is surprising. But so they have to go to places where there's like already access to lava flows. So Hawaii could totally do it. The sort of fire ring area can do it. And there are stocks that they're starting to kind of get there. They need the government support early on, otherwise they run out of cash quickly because it's expensive. But if you're going to pour money into like these wave technologies versus like accessing something that's already 3,000 degrees, I don't know. I think the incentive is better
Right.
longer term to access the molten lava under our feet.
Because I know we coming up to the end of the show a little bit here, but we talked about the features a little bit as far as like, the way how you see in the stocks going. But what about yourself? Are there like any improvements in your life, as far as from habits that you want to improve, or even in your career coming up?
Always, on a daily basis, I'm trying to do things better. Efficiency is like a big one for me. 'Cause we've got, with a startup, there's always more to do than you have staff.
Mhm.
So then it's like, all right, how do I prioritize? What's the process for to doing the prioritization? So that's a constant, how do other people do it? Like, how does a guy like Elon Musk have 7 companies and still running this Doge thing? Like, he must have really good ways to manage, time productively. Um, so I'm always looking for that and ways to improve. I can't say I've cracked the master nut there. I got a lot of posters of my work that I have to do on my wall to keep me focused. And I've tried now some strategies like, I don't schedule meetings in the mornings
That
because
makes
that's my
sense.
productive time. Like, I can write 500 words in 30 minutes in the morning. If I try to do that at 3 o'clock in the afternoon, it's never getting
Man,
done.
right. That makes sense.
Yeah.
Do you have any kids, like wife or anything like that? That's kind of like how are you managing your family household?
Yeah, we have a busy family life and a energetic dog that needs walking a couple times a day and play. And the balance of that is difficult. I've started to get my kids involved and kind of like watching the stock market.
Good.
So I got them little portfolios so they could understand what I actually do for a living. Um, their their mom works for a public company, so we bought a little of those shares. They can kind of monitor, and
What
then I
mom
can
does. Yeah.
explain like, yeah, here's what mom does. Like, when she does a good job, here's what the stock does. No
That's
pressure.
awesome. Because
Um,
I'm thinking your tool would be great for parents to get their kids to say like, hey, you know what? Pick a stock. Let's see what's happening. What are the
mhm.
news behind it? What are the triggers that's going on? And so then like you can actually watch it from a global scale and happening in real time.
It makes things make sense. Kids, they want obviously to be on screens at all
Hmm.
times. So
Yes.
when I show them the platform, I'm like, here's what happened today. Here's the event.
Mhm.
This CEO left. Like, do you think that's good news or bad news? And they would say, that sounds like bad news. I'm like, all right, so here's what the share price did. And it goes down. And they see this like bear indicator. It's like an angry
Oh,
red
that's
bear.
cool. Yeah.
And they're like, oh, I love their angry bear. And they get it. They're like, okay, so that makes it go down. This makes it go up. This makes total sense. And they're going through it. I'm like, now, why, for another event and say, why do you think this happened? And trying to explain like the interconnections in the economy, but we'll look at things that they see on a regular basis. So like I drive a GM car, so we looked at GM stock. They
Nice.
love Teslas. We look at Tesla stock and like the product launches and how they did. And Tesla product launches is one of our events that we track, but it's like 50-50. 50 times or 50% of the time stock goes up, 50% of the time goes down. And then they can see that. And they're like, well, what happened when, they launched the Cybertruck? Let me see. Let me see when they
Right.
launched it. And I'm like, oh, why did it do so badly? I love the Cybertruck. I'm like, well, you want to watch the video? I'll show you the video. This
So
was supposed to
ugly.
be the bulletproof glass that the thing
Yeah.
went through. So, we mix it up and then like it makes sense of the world for them. So we actually find now lately, we're getting a lot of women that sign up for the app.
Mm.
Um, and we've kind of done the research during the beta test, so we knew why, which is like they like to know what happens next.
Yeah.
They like to be able to plan it out and kind of see the why and see what's about to happen.
Mm.
Um, whereas, it's slightly different, I would say, than like male traders who are like just do
Yeah.
the short win.
Right.
I don't care why. Just just as long as it works.
Those are is it making me money today? Okay.
Yeah, exactly.
Because I noticed that even when I looked at my analytics, I have more women watching the show since I would say August of last year. It's almost like I would say almost like a 74% for women watching this show. since last
That's good.
time I looked.
That
So I
means you're
guess
doing well.
oh, amongst the ladies
It's
here.
usually the test, like, because the stocks that I see that do well, like especially on the retail side,
Mm,
more women behind it than guys, like a Lululemon kind of stock, or other retail outlets that really know how to put the deals out there better and merchandise better.
I like that. So before we get to the final four questions, is there anything that you want to leave the audience with?
I would tell you how to access LevelField's if that's useful.
Yeah.
You go to levelfields.ai. You can sign up for a free newsletter and get an idea what we do. We have a YouTube channel that also gives away some free ideas. You kind of get a flavor of it. Part of the offering that we have is to do it yourself, which is like the $300 a year version, which we should make back in one trade. And then we have the we'll help you. We kind of send out a couple trades a week, and then it's turned out to be a pretty good educational resource because it's showing the why behind the idea. So people really like that level 2 now. It's growing pretty rapidly. So if you don't feel like you have the time to do it yourself, we can certainly help you with that. And if none of this sounds interesting, please refer to your write it down and tell your friends. Just guarantee somebody that's going to want this. If you're exercising or doing the laundry, just jot down LevelField's AI and please let other people know.
Nice. And remember, have the kid mentality.
Yes,
like what's happening, right?
Exactly. It's
All right.
enjoy the interconnectedness, the butterfly effect.
Ready for the final four?
Sure.
Alrighty. Number one, what does wealth mean to you?
Time.
All right.
Wealth is time to me. You don't necessarily need money to have it, but it gives you the time to enjoy things.
I like that. Number two, what was your worst money mistake?
I was about to liquidate my entire portfolio in 2007 and buy only Apple stock with it. And I did not. And I still to this day, and I loaded up the ticket and I was just going to put everything I had into Apple stock. And I had all this like previous bad advice in my head of like, oh, technology always changes. Like, you never know what's going to happen. Don't put all your eggs in one basket, diversify, all that. And I didn't do it. And not only did I not do it, I didn't buy a single share. And I don't know why, looking back. I think I was so ashamed of like just getting scared of doing that move. So that ended up losing many millions of dollars. Not losing, but not gaining like access to it. So I was teaching my son some math the other day, and I made him run the numbers.
Nice.
Of how much that would have been today. And he was like, Dad, you should have totally done that. We could have had like such a better house.
It's always about the house, right?
Yeah.
This is better. We could have had a Tesla Cybertruck.
Yeah, I could have had a quad and you could have had a Cybertruck. Like, well, there's risk and reward.
Yeah. This is the beauty of shooting your shot, right?
Yeah. So that one hurt.
Number three, is there a book that inspired your journey or changed your perspective?
Yes, although I don't think it's maybe what you mean by it. So Jurassic Park.
Interesting.
Not so much because I wanted to dig up dinosaurs, but the author, he wrote Jurassic Park after dropping out of Harvard Medical School, Michael Crichton. So he's in his third year of Harvard Medical School, which fairly difficult to get into, pretty much set for life, to be able to graduate from there, go on, be a doctor, have a pretty stable income, right? What most people aspire to.
Yeah.
And he gave that up on the risk that this idea for Jurassic Park would be a huge hit. Of course it was. He was right. But being able to look at that and walking away from something that's a success to go for something that's an unknown really inspired me. I was like, okay, I can do this too.
Nice. Did you walk away from like
Well,
school?
it was like,
with,
it was a guy who was going to go to law school and be a lawyer, and at one point was doing environmental management kind of work. And that was a safe choice.
Yeah.
But it's like, you know what? That's just not for me. I want to do something bigger. I like to build.
Nice.
It took many years to realize that, who I was as a core person. It's like I'm a builder. I like to make stuff. If I'm not making things, then I'm probably making my wife miserable.
Sounds like a fun time at home that day.
Need projects.
Number 4. What is your favorite dish to make?
Dish. Chocolate banana pancakes.
Okay. Let's see a picture of those.
Well, they're good. I've gotten very good at them. My kids love them. So
Nice.
I try to make them every Saturday morning.
There you go. And the very last question of the show, which is where could people find out more about you?
More about me? If you want to know, you can certainly Google my name, Andrew Einhorn. There's another one who takes dirty photos. That's not me. But the one that does podcasts, that's me.
I did notice that when I came across looking you up.
Yeah. I mean, they're good, but no, that's not me.
Okay.
We have different hair. He's curly hair, mine's straight.
Got it. Well, thank you so much for coming through. This was such a fun time having you on, and got a chance to learn a lot about AI, a lot about what we can do with it, and also how we can actually utilize it in our futures. I really think that what you have is almost like an episode of Black Mirror on the level of insight that it can possibly provide. I can't wait to see it on one of those episodes. So thank you for sharing that with us.
We haven't taken the creepy turn yet to be Black Mirror, but I'll let you know if we do.
Okay.
Thank you. Appreciate it. Thanks for having me on.
You're welcome. All right, everybody. We out. Be safe. Peace.